Good evening, everyone. I'm Vaishnavi Vaiti from Kirin Advisors. Welcome to the virtual roadshow of Citichem India Limited. Today, we will provide a brief overview of the company and its innovative business model. Citichem India specializes in procurement, supply, and distribution of organic and inorganic chemicals, bulk drugs, and food chemicals, primarily catering to pharmaceutical industry. Citichem's product portfolio extends to specialty chemicals and intermediates with applications across diverse industries, including aluminium, steel, textiles, paper, paints, dyes, soap making, food, and adhesives. From management team, we have Mr. Arif Merchant, founder and managing director.
Hello,
Good
everybody.
evening. Good evening. Welcome. We have Mr. Hakeem Arif Merchant, executive director. Good evening,
Hi,
sir.
good afternoon.
Welcome.
Good evening, ma'am.
And from Horizon Management Private Limited, we have Mr. Akash Das, compliance manager. Good evening,
Good
Akash
evening,
sir.
ma'am. Good evening, ma'am.
Now I hand over to Arif sir to give a short intro and journey of the company. Over to you, sir. Thank you.
Hello. Yeah, good afternoon, everybody. My name is Arif Ismail Merchant, and I'm a founder of this company. And I have started this company in the year 1992. ये कंपनी शुरू करने का मुझे ख्याल इसलिए आया because my father was into the logistic business of handling fine and heavy chemicals since 1958. एंड उनके जो सक्सेस के बाद में फिर उसके बाद 1992 के अंदर मैंने ये कंपनी शुरू की सिटीकेम इंडिया लिमिटेड स्पेशल प्योर अल्कली प्रोडक्ट्स के अंदर डील करने के लिए और यहाँ के जो मैन्युफैक्चरर्स इंडियन मैन्युफैक्चरर्स जो थे उन्होंने मुझे डिस्ट्रीब्यूटरशिप दी और यहाँ पर मैं ब्लू चिप कंपनीज को गुड सप्लाई करता था क्योंकि लॉजिस्टिक का मुझे काफ़ी कुछ एक्सपीरियंस था इसके लिए ये बिजनेस को आगे बढ़ाने के अंदर मुझे काफ़ी हेल्प मिली और काफ़ी लोगों का सहकार भी मिला और एक अच्छा रेपुटेशन हमने कायम किया इन द ईयर 2018 ये बिजनेस मैंने मेरे इस बिजनेस के अंदर मेरे बेटे हाशिम मर्चेंट को मैंने साथ में लिया हु इज़ द एग्जीक्यूटिव डायरेक्टर ऑफ दिस कंपनी और इन्होंने इस बिजनेस को और आगे एक्सपांड करने के लिए और बढ़ाने के लिए काफ़ी मेहनत की इसके अंदर और पिछले 6 साल के अंदर इन्होंने काफ़ी कुछ नए प्रोडक्ट्स इंडियन एंड इम्पोर्टेड दोनों इन्होंने इंट्रोड्यूस किए और मैं अभी मिस्टर हाशिम मर्चेंट से कहूँगा कि वो अपनी इस सक्सेस जर्नी के लिए आगे बात को बढ़ाएं।
Hi, good afternoon, everyone. Firstly, it's a pleasure to be on this roadshow. Like my father said, I am actually the third generation in this business of chemical trading and distribution. So having the expertise and working under the leadership of my dad, Mr. Arif
Yes, the same sir has lost his network. Please allow.
I think there was a network disturbance on the server or the website, so everything went. So I'll restart. Like I said, my name is Hashim Arif Merchant, and I am the son of Mr. Arif Merchant, who's the founder and promoter of Citichem India Limited. So, like he mentioned earlier, that we've been into this industry for almost 30 plus years, and having a 3-decade-old experience, it's been a very exciting and curious journey. Looking at the way we've come so far, in the last 20 years of business, we've introduced many products associated with the food chemicals and laboratory chemicals. Subsequently, we've analyzed and identified various other products that we could expand and further get into, wherein the company would benefit on the lower on the best margins possible and expand in the right strategic way. So it's been a great journey so far, and we're looking forward to post IPO successfully executing the plans that have been put in place. So not wasting any time, we would like Ms. Vaishnavi to start the presentation slide, wherein we will explain about the in-depth of the company in detail and for a better understanding.
Yes, thank you. Can we start with the company presentation, please? Over to you, sir.
Okay, so like we said, we'll start with the introduction of the company. So basically, we are into supply and distribution of organic and inorganic and specialty chemicals. Also introducing a lot of other FDA chemicals and food chemicals. Uh, Majorly, it caters to all the categories of industries like aluminium, steel, textile, paper, dairy, paints, dyes. So it's a universal category of product which caters to the entire industry of various manufacturing units. So apart from that, we have also introduced a USP in fruit preservatives and chemicals, wherein we are trying to specialize and gain a market share on the food chemical sector. Moving forward from the commodity chemicals, just being a commodity chemical supplier, we're moving on towards being a food preservatives and chemical supplier as well. Next, please. So we've been into this business for over 30 plus years. We primarily deal in two states, which is Gujarat and Maharashtra. We have three business verticals. One is the specialty and inorganic chemical sector. One is the food chemical sector, and the third one is the laboratory chemical sector. So we've got a combined experience of 25 plus years since we've been in this industry for quite some time now. The financials of 2024, we had a top line of almost 20 crores with an EBITDA of 179 and a PAT of 1.11 CR. And percentage wise, the ROE was working out to 15.42 and ROCE was 21.47. Next. So this is the leadership board, and Mr. Arif Merchant is the promoter and managing director. Likewise, I am the promoter and executive director, and we have other two promoters and non-executive director and independent directors on board. Next. So like we said, like we're working on three verticals. One is the specialty chemicals, intermediates, APIs. Basically, this is in context to the commodity products that is used in various industries. It's basically universal products wherein there is high volume, less margin, more competition. And moving to the next vertical is the food chemicals, where we are trying to expand our reach and get into repackaging and retail distribution and marketing, and be trying to be present in all the mom and pop stores present across the nation. So that's where we are right now majorly focused towards and enhancing that particular business. Third is the laboratory chemicals, which we provide a one-stop shop solutions to for all the laboratory chemicals that is required for testing purposes and R&D purposes. Moving on to the next slide, please. So this is a brief of the product portfolio that we deal in. We've been associated with the chloroalkali industry products like caustic soda flakes, lye, and hydrogen peroxide, which is like a universal product which caters to all the category. So having stiff competition, but since we've been into this industry since the last 30 years, so it's been a smooth journey so far. Likewise, we have other products which cater to other industries also, like food chemicals. We have citric acid monohydrate, we have monosodium glutamate. We also have tried our hands on being a trading company. We've introduced other products also on a trading perspective, wherein we are dealing with petrochemical products like oil, fuel oil, and carbon, and that is basically waste to energy, waste to chemical products. So we are trying and exploring, and post the IPO with the infrastructure that we're going to build, we're going to have an R&D setup wherein we are also going to try and test on and do research on various waste to chemical products. Next, please. So looking at the industry overview, the market has been on a growing stage. it's basically growing at a CAGR of 12% per annum, and the global specialty sector is growing at a rate of almost it's been a 20% of the global market share that we have. So there are other government support and policies also that are there for this particular industry. So we are hoping to leverage out of that also. Post listing, we also will have the opportunity for strategic investments for expansion of the company and taking it to the next level. The key financial highlights is available on the screen, so we'll just go by it. The FY 2022 was we had crossed a top line of 85 crores. The reason being, it was post-COVID, so the prices of the products, the costings of the products were relatively on the higher side. There were products that the prices increased to almost two-folds, three-folds, four-folds because of the post-COVID impact and the pandemic situation. So that's the reason we see a rise in the top line sales. But the average sales of the company, like you see in 23-24, is approximately 20 crores, which is our actual business average sales annually. So moving forward, in June 24, in the first quarter of 24, we have achieved 1.5 crores. Reason being, it's a slack period for the chemical industry because it's a seasonal business, and like I mentioned, the second half of the year usually is the festive season and the peak season for the industry. So that's the time when the revenues shoot up. So we are confident that in this particular financial year also, we'll be at par with the average revenue rate that has been going on. And moving on to the EBITDA and PAT, the FY 2022, like this, there was a rise in sales with regards to the cost of the products going higher. Subsequently, the costs also of the services went up higher. So there wasn't enough realization on the bottom line that you see. But we've worked on it, and we've tried to identify certain products in the following 2 years, and we've achieved a PAT of almost 1.10 crores plus in financial 24. Mainly because we've cut costs, we've identified the overhead expenses that were incurring, which was making the profitability, which was affecting the profitability. And we tried to analyze that, and we are still working on the betterment of trying to get to the best bottom line than just trying to focus on the top line turnover rate. And then the graph on the third page also, the third section also shows the EBITDA percentage and the PAT percentage, which has been increasing year on year, considering the facts that I just mentioned, the cost cutting and identification of high value, low volume products rather than low value, high volume products. Moving on to the next slide, please. So we've got strategies put in place considering the expertise and the experience that we have and the leadership team that we have, and under the mentorship of and guidance of our MD and promoter. There are quite a few strategies that have been put in place for the betterment of the company and enhance the balance sheets of the company. So like product expansion into the newer markets. We also have plans to tie up with global overseas players with strategic partnerships and distribution rights for pan-India distribution of their products. Secondly, we are also working on creating a brand for the retail market and try and cater to the daily household food chemicals that are being used on a daily basis in households. We are also trying to enhance the technology aspect for marketing and trying to reach the best client reach, for which we're going to leverage branding and digital strategy put in place. We're going to also we've identified the locations for our own infrastructure, and we've also identified and having plans to set up our own fleet of vehicles to cater to the client's need and provide them with the best end-to-end solutions, and being the nation's one of the top service providers for chemical products. So, like I said, the chemical sector has been on the growing stage globally, and the industry has been evolving and changing with time, where there is enough opportunity for growth. It's with the expertise and the experience and the 30-year-old legacy that we've been in this industry that we were able to identify the growth strategies for moving forward in the best possible way, because the business is a scalable business model, and we are going to now focus on the quality and innovation and USP. Since we have cordial relationships with our customers and suppliers, we're hoping to be on the growth side for the next couple of years, hopefully. Next. Coming back to the issue highlights, we are coming up with the SME IPO on the BSE SME platform. It's a fresh issue of 18 lakh equity shares with a face value of 10 rupees per each. The issue size would be 12.6 crores. The issue price is 70 rupees per equity share. The lot size would be a lot of 2,000 equity shares. So the application amount would be 1,40,000 per application for retail investors. The issue opens on the 27th of December and the issue closes on the 31st of December. And we're looking at the listing in the new year. The RII portion is 8,54,000 equity shares, wherein the other investors and market maker portions are also allocated. The pre-issue equity shares were 50 lakh equity shares. Post-equity would be 68 lakh equity shares, adding the 18 lakh equity shares that are offered for fresh issue. The market capital of the company post-issue at the upper side would be 47.60 crores. The promoter and the promoter group hold almost 83.25% of the company. The rest is with the company, with the public. So we're looking to list on the SME platform on the 3rd of January. So the objects of the issue, the funds are going to be basically the gross proceeds of the issue would be 12.6 crores, out of which there would be issue related expenses. The net proceeds to the company would be 11.8 crores, out of which there would be capital expenditure for acquisition of the property for our own infrastructure, wherein we are going to have our own state-of-the-art warehouse with the state-of-the-art technology and right storage infrastructure put in place for us to expand and move on toward the manufacturing sector with in the coming time. So we are working on the backward integration for which acquisition of the property is going to be taking place, and there'll be purchase of transportation of vehicles to the tune of 4.7 crores, which will help us have full control over the distribution network of the products that we are going to supply to our clients and also source from our suppliers. So having, as of right now, the company outsources all the services. So now we are working towards building our own infrastructure and our own fleet of vehicles for the best services to the customers that we can offer at the cheapest possible costs that can incur. So we would like to be the end-to-end service provider to all our clients, wherein it will be a one-stop shop for them to join hands with us and not take any stress over having the logistics part also would be taken care of by the company itself. And the GCP would be 2.79 crores. So it's a very proportionately divided. If you look at the graph, it's basically for the asset building and infrastructure creation of the company, which will benefit the company in the future. Next, please. So, like I said, the strengths of the company is that we've been in this industry for almost 30 years now. So we maintain a very cordial relationship with the customers as well. And since we are located at a very strategic location, that is the location advantage that we have, because we are in the hub, which is Mumbai, and we have our entire facilities, which is close to Mumbai and which is the center point to cater to pan-India distribution. Coming to the opportunities, there is, enough opportunities in the market. Like I said earlier, the market has been on a growing stage. So identification of the next step forward for the company is already identified, and we are working forward to execution of the same. So like all businesses come with certain weaknesses. So since it was a trading business there's high capital requirement because there are certain equations with suppliers that you have, and you have to work in terms and conditions as per the supplier. But moving forward, we are also actually moving forward. We are trying to reduce dependency of manufacturers and trying to build USP products on our own, like API formulations or food chemical formulations, which will create a USP and reduce the dependency on manufacturers and suppliers. And like I said, it's a commodity trading business, commodity product trading business. So there's always tough competition because the number of manufacturers 20 years ago and as compared to today, almost 10x. So likewise, the competition is also increased, and we need to identify USP products moving forward, which has already been put in place, and we are in the process of executing the same. Next. So key investment rationale, market expansion and growth. So we are actively working towards newer markets and targeting and expanding our product offerings to drive sustainable growth. The commitment to quality, we delivered certified high standard products to our customers, and we've never had any complaints as far as service or quality of the product is concerned. So that is one place where our expertise and our experience has come in place. Then we've got strong relationships with robust supplier partnerships, personalized customer service center, and timely delivery, product excellence, customer loyalty. We are also, like I mentioned, since 2018 into product diversification, where we are broadening the product portfolio to address the new markets and market segments, leveraging the strong customer relationships and the industry reputation that we hold. So we've also had a proven leadership and growth potential. Being in this industry, we have the far good reach and network with industry players and manufacturers and suppliers and buyers. So moving forward, introducing new products and trying to work on formulations and marketing that would be relatively easier and smoother as compared to being a new player and trying to convince buyers and building relationships. We are working aggressively on improving profitability of the company. Like I mentioned, the top line is just not the focus of the company. We are looking at bottom line very seriously, and it's just that we are wanting to do business to make money and not just cover just the market share. That will fall into place provided there is sustainability moving forward and keeping the long-term horizon. So we have been growing steadily year on year in terms of PAT and EBITDA, and we look forward for sustaining the same and having increase in the same in the coming time. Next. So we've got our lead manager, Horizon Management Private Limited, who's the merchant banker and the lead manager. We've got the registrar, KFin Technologies. We've got the legal advisor team, which is Sushmita Adhikari and Associates. The bankers to the issue are ICICI Bank, and the company bankers are also ICICI Bank. We've got the statutory auditors, NGST and Associate, who are the chartered accountants and auditors of the company. And then the market maker and underwriter to the issue are After Trade Broking Private Limited. And the PR agency and the designing partner and marketing is handled by Kirin Advisors Private Limited.
Thank
you so much, everyone.
Yes, we will start with the question and answer session. I request all the participants to post their questions in the comment box. Thank you. The first question is from Priyanka Thakur. How do you ensure the quality and timely delivery of sourced chemicals?
Thank you so much for your question, ma'am. See, the quality is ensured because we are dealing with reputed manufacturers of India who have specialized units and great manufacturing facilities and well-known large-cap Indian manufacturers who we deal with. like Grasim Industries and Make Money Fine Chem, who have the quality and their quality department in place. And with every consignment, they also issue a certificate of analysis, which which validates the authenticity and the quality of the product. And the timely delivery of the source material is taken care of the expertise that we have and the right partnership that we have had with logistics partners who ensure that the service is provided within the right time and the right place.
Next question. Deepak Kulkarni, how does your company differentiate itself in competitive chemicals market?
See, earlier when we started in 1992, there were very few players because there were very few manufacturing companies who manufactured these products. And to name, there would be one at that point of time with multiple plants across India. But moving forward, there were other big conglomerates who introduced and got into the chemical sector, like Aditya Birla Group, who started off with their chloroalkali plant. Then there was Make Money Fine Chem, who came up with their own chloroalkali plant. Then there was Nirma Industries. Then there was Ghari Detergent. So all these people introduced their own manufacturing companies, and likewise they had their own appointed distributors, who in turn turned into our competitors. So over a period of 20-25 years, this products turned out to be like a commodity product rather than a USP product. So in 2018, we started working on trying to differentiate ourselves from the competitive market and introducing our own USP products, which we have been aggressively working on and doing our own research. And identified a few products which will differentiate ourselves from the other competitors in the market in the next few years.
Next question.
Now,
Anjali Gupta, what percentage of revenue comes from specialty chemicals versus bulk chemicals?
see, there's a proportion of business because we deal in products which work on supply and demand. So there is no fixed ratio of specialty chemicals versus bulk chemicals. Nevertheless, majority of the business in the last 3 years, since we've been into the chloroalkali industry for quite some time, so majority of the share of the business was coming from the chloroalkali industry. But like I said, we are trying to diversify into other product categories. So it's been scattered in the balance proportion of the business has been scattered into food chemicals, specialty chemicals, laboratory chemicals, and so on. So there is a mix of everything, and since it's a supply and demand, there is no fixed ratio or percentage that can be analyzed on a year basis.
Okay. Next question. Dhwani Ahuja, how scalable is your business model? How quickly can it accommodate future growth?
See, the business has been on a growing stage and growing at a CAGR of 12% per annum. So there is enough potential and enough opportunities because India is growing, and for the global market now, India is like the top three choices for any kind of procurement. And after the new government initiating and promoting the Indian manufacturing companies and Indian suppliers and traders, that's also helping in enough and giving enough boost for us to approach global markets and new players and newer markets and try and expand there, where we already see enough interest coming for the Indian market.
Next question. Deepak Kulkarni, how is your company adapting to industry trends and staying competitive?
See, since we are into this industry for almost 30 years, we have that experience, and our leadership and our mentorship under Mr. Arif Merchant has been quite helpful in analyzing the business strategies because the experience that he holds that helps us to maintain and adapt and keep up to the industry trends and trying to stay as competitive as possible considering the older relationships with suppliers also. So to get that preference, considering the association that we've been having, there's always the upper hand that we get from the market as well as suppliers.
Next question, please. Devesh Purohit, future plans for subcontracting, repacking, and branding.
Of course, we surely have the future plans of subcontracting, repackaging, and branding put in place because we are planning to enter the market on a pan-India level, wherein the market is going to be catered to distributors and subcontractors who will be appointed by the company for the distribution and selling and marketing of this particular product which we have. So that's definitely, it's going to be a part of the coming time in the plans that we have. That once the infrastructure and everything is put in place, and the entire unit is up and running, that's the time we'll have invitations to distributors and franchisees and subcontractors for them to come and give their feedback and associate with us.
Next question. Raj Gandhi, what major risk do you see in your business?
We are actually analyzing the risk factors and trying to find out a solution as to how do we try and tackle that area. So there are quite a few analysis that has been done because having the expertise and the experience of 30 odd years, you analyze and you observe the trend of the market, on a seasonal basis as to we've already tried and cracked that this thing that what sells at what time and when is the right time to buy and when is the right time to sell, because we've been having that expertise of trading since the last 30 years. So basis on the observation and the past experience, we have all the risk factors put in place. But like I said earlier also in our presentation, that working capital in a commodity product trading business is the biggest challenge, because these are all high value, high volume products which we are dealing in. So the risk is there in all the businesses that you do, but that is a risk which has been taken as a factor into consideration. We have our strategies put in place to handle those situations.
Next question. Hardeep Baby, what is working capital cycle in days?
See,
Should I
usual
repeat?
working cycle capital is 90 to 120. Am I audible?
Yes, sir.
Usual working capital cycle in this industry is 90 to 120 days, because as traders we deal with suppliers, traders, and consumers who have different terms and conditions and their own payment cycle or payment terms conditions put in place as their own mandatory way of working with suppliers. So usually it's between 90 to 120 days.
Next
But
question.
this is not considering the COVID period, because that was the pandemic period was unexpected and very uncalled for, and things were disturbed during that period. So barring that period and post COVID period, the usual working cycle is 90 to 120 days.
Okay. Next question, please. Bimal Gandhi, what percentage of dilution is expected during the IPO, and what will be the post-IPO shareholding of the promoters and promoter group?
See, the the percentage of dilution is 27% of the company, which is 18 lakh shares of 68 lakh shares.
It's approximately 26.47%, and post IPO promoter shareholding will be 61.21%.
Thank you, Akash.
Next question. Lavanya Balakrishnan, what are your plans for next 2 to 3 years?
Next 2 to 3 years is fully focused on the infrastructure and distribution network put in place with our own warehousing facilities and our own distribution vehicles. Parallelly, we have identified quite a few products that we would be launching in the next 1 year in the food chemical sector, which we are aggressively working on. So I think in the next 2 to 3 years, we will see a healthy amount of bottom line appreciation in the coming time. Like I said, we are now strategically working towards high margin, low volume items rather than getting into high volume, low value items. So we
Next
are
question.
working on margin profitability.
Next question, please. Ankit Sarodia. How experienced is your distribution team in managing bulk supplies efficiently?
So, like I said, I come from a background where we have been associated with the industry since 1957, and my grandfather used to be a logistics pioneer of chemical industry at that point of time. So, having that expertise and having our leadership under Mr. Arif Merchant, who also holds that expertise and experience, so managing and handling, we've got a fantastic distribution team put in place to handle, all the orders that the clients have ordered or are willing to work with. So services have always been the USP and the key point of the company, because in the trading business, since the competition is so high, the only thing that matters is the service and the price. So I think we've done a fairly good job, and moving forward, we'll maintain that.
Next question. Neeraj Apte. How do you plan to expand your market presence in India?
Like I said, now since we are going to be introducing a few of our own branded products in the coming time, we're going to have the right distributors and franchise partners and contractors in place. So we we'll leverage of the entire team of distributors and franchise owners and contractors, and try to get to the best reach pan India as possible.
Next question, please. Pihan Bhandari. Is relying on top 10 client customers for all revenue is a risk, and how will you manage it?
I guess there is.
Hello, am I audible?
Yes,
Sir,
Asim
I
ji, you are.
think
Is it reconnected?
yes, sir, now it is. Are you able to hear us? We will wait till they rejoin.
Okay, ma'am.
I request our participants to please wait as there is small network issue. Management
Yes,
will
ma'am.
be rejoining in a minute. Yes.
Sir, I've added you to the stage.
Arif sir, can you hear me?
साइन कर दिया था हम साइन कर दिया था अग्रीमेंट Hi, sorry, there was a network disturbance, so I think the server crashed. So we restarted. So coming
Yes.
back to Vihan's question of relying on the top 10 customers for all revenue or risk. Uh, like I said, now we've been trying to move on from the commodity business, which is a universal product and caters to 100 odd customers. Now we're moving from that and identifying various products that we can work with, and out of which, there are quite a few products on which are still at the initial pilot stage. So we are seeing a dip in the revenue. One of the main reasons is that because now it's still at the pilot stage where we are working with a few players to identify and analyze how to get the best output of the products that we are wanting to sell at a larger scale. So for the time being, the customers are restricted because it's at a pilot stage. But I think in the coming 2 years, the customer base would increase once we finalized and freezed on to the best product for the mass market.
Okay. Next question. Raj Gandhi, do you own transportation vehicles for deliveries?
The company doesn't own any vehicles. The services are all outsourced, which the company wants to convert into their own distribution fleet of vehicles, for which we've already it's a part of the IPO proceeds. And moving forward, we are hoping to have our own logistics fleet in place of the company.
Next question. Vimal Gandhi, the company had negative operating cash flow in recent fiscal year, which could impact the business. How do you plan to manage this risk? So, was I audible?
We've analyzed the same. That has been the case only for last year. Moving forward, we've put in the right strategies put in place, and that should be impacting in the coming balance sheet.
Okay. Next question. Devesh Purohit, company's growth strategies, land acquisition, warehouse, fleet acquisition to build complete infrastructure, bringing operational efficiency, adding to profitability.
Very well said. That's absolutely what we are wanting to get into, and that's the plan moving forward.
Next question. Subodh Joshi, how would investors benefit by investing in the company?
See, like I said, the company is on a growing stage, and since they are working on products which are going to be custom made and client specific requirements. So that will make it a USP and differentiate ourselves from the others. And since the company is looking at building their own infrastructure, which in turn is going to be in the assets of the company, uh, and likewise also the fleet of vehicles that we are wanting to introduce will all add up to the assets of the company. And moving forward, leveraging those infrastructure and fleet of vehicles, we are confident of achieving better bottom line, which will also help the investor benefit as much as the company.
Next question. Navya Bhatnagar, how do you mitigate risks associated with raw material price fluctuations?
See, we work on order-based requirements unless there is a term and conditions or a special price fluctuation that has incurred. Uh, all those risks are already been taken into consideration over a period of time of doing business. And like I said, all these years, we've been selling universal products. So price fluctuation is a part, but we mainly deal in client specific requirements and order based quantity.
Next question. Arjun Verma, does the company face any strict regulations from the government?
See, being in the trading business so far, there are no regulations as such which a trader needs to take the stress of. That is on the part of the service providers. But moving forward, once we have our own infrastructure put in place, we've also analyzed the permissions and the working documentation and the formalities required from the government, which is not much of a restriction because the government itself is promoting the chemical Indian sector for them to cater to the global market. So the government has been supportive in that case, on the contrary.
Okay. Next question. Farmer Roberts, what is your plan to diversify from trading business as you are now going public and trading business will not give you a good valuation?
Correctly said, and that's why the entire focus is to move from just a trading company to a deem manufacturing or a processing unit, selling their own branded products to the mass market on whether it's retail or through franchise owners or through a distribution network, which I'm sure over a period of time in the coming years would also create assets for the company, which would be on the appreciating side, and we have the right infrastructure put in place for further expansion of the company to benefit furthermore and leverage out of the infrastructure that is being built. So we are slowly working towards moving from a trading business, just a trading business, to processing or deem manufacturing and repackaging center.
Next question. Maitri Shah, what are the products we will be manufacturing in our own facilities and when will this factory start?
See, the products would be related to the food preservative and food chemical sector. It's at a very primary stage for me to disclose the products right now because it's at a very primary stage, and we are wanting to enter the market with certain USPs, not disclosing the details of the exact products, because since these are chemical products, the base of these chemical product manufacturing are formulations, and we are working towards that, and once the final product is out in the market is the time when we would like to disclose this particular range of products that we are wanting to introduce. Since the competition is high, I think it's too primary a stage for me to disclose this particular product.
Next question. What is the revenue contribution from your largest customer for last 3 years and also the customer is same for last 3 years?
See, the customer, we are having long-term customer relationships with parties that we have been working with. So there are customers who've been associated with us for almost 2 decades. It's not that there is any priority customer or a preference customer. We hold a very cordial relationship with all the customers that we've been interacting with, and the largest customer revenue contribution proportionately would be about 20-25%.
Next question. Lavanya Balakrishnan, what are your future growth drivers?
Like I said, now the company, since it is on an expansion spree and wanting to move in the right direction with the correct strategies put in place, The first thing would be to have our own infrastructure and moving on from the outsourced services, which will help us cut cost and get the company benefit and leverage out of the cost cutting, which will impact the balance sheet in a positive way. So we are looking at cutting cost, having our own services and the best service possible to the customers at the lowest possible rates, which will help us in the future for growth.
Next question. Arjun Verma. Does the company receive any benefits from government schemes?
Since we are a trading company right now, we are not eligible for such benefits of government scheme because that is only been offered to manufacturers. But in the coming time, once we have all the right things put in place and we execute the first phase of plan 1, so that's the time when we get into manufacturing and then would avail such benefits of government schemes as well.
Next question. Subodh Joshi, who is your closest competitor?
See, there are peers in this industry, which is already mentioned by us, but there is no close competitor as such, namely to be, because it's a big market and the chemical industry has over almost 10,000 suppliers and traders that work in this industry. So it would be very difficult for me to pick and pinpoint any particular close competitor as such. But being in the chloro industry, there are other listed entities who are our peer competitors. Information on that is available on the public domain.
Okay. Next question. What is the growth guidance for next 3 to 5 years, and which product segments will be the growth driver?
Like I said, since we have a very robust team and we've got the right mentorship and leadership of experienced founders and promoters of the company, so the next 3 to 5 years would be focused towards moving from just commodity chemical products to specialized chemical products, primarily food preservatives and chemicals, and also laboratory chemicals for research and development, which now not have a mass volume as such, but on the margin side they are much more profitable. So we are
Next
working
question.
towards food chemicals and laboratory chemicals.
Abhishek, what are the major expenses or any exceptional expenses that could be there in the future?
See, expenses would be in asset creation, which in turn is going to be the asset of the company. So there is no such expense which is going to be incurred out of which we are not going to leverage out of, or the company is not going to benefit out of. So any expenses or any investments being incurred is for the betterment of the company and for better profitability and asset creation of the company.
Next question. Magma Roberts, what is the current distribution network you have and in which major states?
See, currently we are very strong in the western region, primarily Maharashtra. We are currently operating out of Maharashtra, and we are also catering to 2 states as of right now. But in the coming time, we have plans to grow pan India and appoint distributors and subcontractors and move forward.
Next question. From where we primarily source the products?
There are various industry leaders who are manufacturers of various chemical industries. So we have been working with prominent players of chloroalkali products, where we've been directly associated with them and have procured and sourced material from them.
Next question. Abhinash, where do you imagine your company to be in 2047, and any long-term message to your shareholders?
See, the plans would always be for the betterment and growth of the company, whether it is 2047 or the next 2 generations taking it forward. So the idea would always be to enhance the business, enhance the product portfolio, get to the best, reach pan India globally, and be the industry leader. Everybody aims for high vision. So we are hoping to be one of the industry leaders by 2047, hopefully. Long-term message to the shareholders are that we are a very dedicated team of founders, promoters, and team leaders who are working and handling the business, and we are quite confident of our business strategies and plans moving forward. And 2025 onwards, we are looking at a drastic change, and we've termed this as a post IPO as a Citichem 2.0 version, wherein we are going to get to the next phase of expansion of the growth of the company. So I think it will be a relatively good journey coming, considering 25 years from now onwards.
Yes. Next question. What sort of margin expansion we can expect from diversification we are planning?
See, it would be much more compared to what the current percentage of PAT is. I cannot predict the exact number, but it is relatively higher as compared to the commodity chemical products that you deal in. Because even though the margins or the volume would be lesser, but the bottom line and then the cost involved, it results in better profitability. So we are looking at a better margins moving forward, which will be on a substantial side and not just mere growth. So we have the right strategies and working very hard towards trying to execute and get to the best achievement as possible.
Next question. One last question on post-money IPO valuation.
Akashji.
Post-money IPO valuation will be 47.6 CR.
Okay. Next question. Jay Bakshi, what a presentation flow. Everything was easy to follow and you made it super engaging.
Thank you so much. All the credit goes to the PR team, which is Kirin Advisors, and they've been really helpful in trying to portray our thoughts in the best possible digital way, which would be very, convenient for the investor to get into the in-depth and the insights and the details of the company. So thank you so much, Kirin Advisors.
Thank you, sir. Abhilasha, thank you for holding.
Abhilasha, ma'am.
I guess we have covered majority of questions. Thank you, Arif sir. Thank you, Haseem sir, and thank you, Akash sir. All the best for the
roadshow. Thank you so much. Thank you so much, Akash ji. Have a good day, everybody. Thank you.
Yes, sir.
Thank you.